Hello everyone and welcome to Pulse of Fisdom with Nirmal. I'm Avan Dabash. Now, commodity prices have sure been in the spotlight after the US election win by Donald Trump. Oil and gas, crude oil prices, agricultural commodities, gold, precious metals, and even Bitcoin have been in the spotlight. So let's understand the correlation of the elections, where commodity prices are headed, and the outlook for India. Peter McGuire, Chief Executive Officer at XM Australia, now joins us. Thank you so much for taking time out, Peter. Let's begin by understanding how you see the change in the White House affecting commodity prices.
Yeah, sure. So I think, one of the great things is that it's a change in sentiment, and that we need to look at the first administration and then naturally the second administration under the Trump presidency. And we all understand his belief in the energy production. We're seeing US production for energy and for crude oil, 64% coming from shale, producing about 22% of global demand or global production. The next producer after that is 50% lower at Saudi Arabia, being 11 million barrels a day. US is doing 22 odd million. So he wants to improve on that number, which is just going to be, I think, if he can take it off and he can achieve that, he might be looking for 25 to 30 million barrels a day, Avan. So there's the first part, and what impact that's going to have to the likes of the big producers and naturally to the global demand picture as far as consumers.
Sure, and you've also had the fall in crude oil prices, largely to do with the strengthening dollar, because the stronger greenback makes the dollar-denominated commodities like crude oil prices dearer in other currencies. So what's the outlook on crude oil prices and where do you see them headed?
Well, we know that OPEC Plus, and there's a meeting on the 1st of December. If it's a live meeting, I'll go to it in Vienna. It may be just on video, so we'll just have to wait and see whether OPEC decide to make it a physical meeting and open it up to the press and to analysts. So it's always a very interesting to get that feel on the street, what the ministers are saying. You're really at the coalface, and that would be the reason to attend it. Now, the second part is naturally, crude has had a significantly volatile lifespan over the last year and a half. We've been highs of nearly 95 on geopolitical concerns and weather outages and naturally hurricanes and so on. And then you've seen it really being wiped out back to that 67, 66 sort of handle for WTI. I've just got the screen open here now, just shy of $72 for WTI. You've got 75.30 for Brent. And they're both the December 24 and January 25 contracts, so on their respective exchanges, NYMEX and ICE. ICE is related to Brent, of course, the International Commodity Exchange. So I feel as though that you've seen an uplift. We've just got to see if there's any major geopolitical concerns capture the market in the short term, whether Iran is still going to move ahead with those strikes as they've told the world, as far as retaliatory action to Israel, and what happens as far as hurricane season in the Gulf and other geopolitical hotspots. So it seems to be on an upward trend, but that war premium of Iran is certainly very much stripped out of it from a premium.
Right, now some economists as well have also warned that potentially Trump's proposals when it comes to tariffs would come as a shock to a lot of countries around the world, like the EU or even for the Eurozone. For India, what do you see as the implications when it comes to tariffs?
Let's examine China first and what his proposals are. Naturally, he wants to re-engage his own domestic manufacturing, from automobiles to technologies to and innovation. He wants to re-engage that workforce and really be the pioneer and at the forefront from every form of technology. And to the likes of Elon Musk joining some form in the administration he'll have. Could be innovation, could be technology, who knows what his role is going to be, but I'm sure he'll have some sort of role there. And so they'll be very engaging, and I think it's going to be it'll be fascinating what President Xi seems to think. If I'm just reading on Bloomberg, Xi better prepared for Trump even as 60% tariffs risk chaos. So if he's prepared to raise them to 60% or higher, then I'm not sure how China's going to compete with that and what impact that's going to have naturally to their domestic market with their own debt problems and workforce. And then leading into India, I think it's again whether Mr. Modi can work closely with Mr. Trump. There could be a deal put together from a crude oil perspective, from an energy perspective. I think there are just so many differing components that can be exchanged from a tariff proposal. And we've just got to see again how quickly he ratchets that up. But it could be very profitable in the sense where he could really pull the crude oil price well down if he increases production, which would be fantastic for the Indian consumer. And you could halve the price from here. I don't think OPEC producers are going to be happy, but I think the overall consumers are.
Right, and given the fact that we have seen gold prices as well expected to face some short-term corrections. Historically, we have seen data reveal that gold's tendency to react to political shifts with a potential decline before a long-term rally is usually the way it goes. So what's your outlook? Where's gold headed?
Well, I think first off, let's look at what's happened over the last 12 to 13 months. We were at 1810 early October 2023. You've now been up to 2800 Ivan, and you're sitting at the best part of 2750. It's been choppy since the election results came through. They stripped out a quick 60 or 70 bucks, and anyway, they've bounced back up again. So it's incredibly choppy. In that time, you've naturally had a rate cut from the Fed. You've had also UK. So all of that, and you've got Bitcoin sitting at nearly an all-time high of 76,000. And you've got gold sitting, I'm just on the screen here, 2702. So it's off, it's on, it's incredibly volatile, and that US dollar back up at over 104. So I feel as though that what we've seen 104.50 for the US dollar index, what we've seen over the last 12 or 13 months has been breathtaking. And maybe it's a point in time that some of that hot air will get stripped out of it, as we've seen. It's off $100. I mean, anyone would be thinking here at 2,800 to 2,700, that's major news. But there are so many other components that go into the design mechanism of markets. It's not really a big issue at the moment. I think it was just a lot of hot air came out of it. And I feel as though that will continue, that upside, because of the likes of central banks. Their appetite has been insatiable. And you're in one of the biggest markets in the world as far as you've got a wedding season, you've got, Diwali, you've had that, of course, but, that opens up to naturally consumption. So I think, overall, we'll see a continued uplift across the gold and silver market by end of year and certainly into 25, Ivan.
And then Bitcoin hitting an all-time high following the election promise of Trump to prioritize the volatile cryptocurrency. His stance as well on crypto has been in stark contrast to what we've seen with the rest of the world, or I could say even the Biden administration. So what is your outlook after the crackdowns on crypto? US President Donald Trump talking about it being a superpower of the world. What does that mean?
Yeah, I'm looking at the screen here. I mean, it's been one-way traffic. You're up, I think, the best part of 8,000 or 9,000 since the election result was announced. 67 to 76. It's been choppy. It's been very volatile, but it's certainly upward. The lift has been strong. And President Trump's mantra as far as crypto and certainly Bitcoin is one of embracement. He's embraced it very, very dear to his heart and certainly to the consumers. So he's a supporter of it. And how that plays, I mean, you've got analysts out there saying 100,000 is the next target. It's been one-way traffic, and it may get there in short space of time. I've heard some numbers. I'm not prepared to exchange them now, but I've heard numbers that have been, sprouted by quite well-known analysts, and it's well in excess of 100,000 US in sometime in 25. So everyone's got an opinion, but they look at the charts, they look at the supply constraints with it. They look at naturally the halving mechanisms and all of those sort of components that go into the Bitcoin price metrics. And it's hard to not have it in a portfolio in some capacity. And I sit here, Ivan, and I'm a lot older than you, and I think, well, at my age, it's silly not to have some part of your wealth involved in crypto. If you've got the president of the largest, well, the number one superpower of the world saying you should be involved in crypto, it's hard not to be a supporter of it in some capacity.
And what is your outlook when it comes to global steel prices?
Well, I've been looking at iron ore, and I mean, we understand the positioning there. It's been a lot cheaper now than it was, and it's over the last, say, year, it's tailed off quite considerably. Steel prices, you've got to look at, first off, the supply side and who's supplying the steel, and then the consumption side, what's going on. I mean, there are some parts of the world, and you look at India, for instance, the infrastructure spend is enormous, and the steel components going into your highways, roads, all forms of train travel, infrastructure, buildings is just immense. That's what I love going to Mumbai. I've been there probably 20 times, and I come on your show and I keep on saying, I can't believe the cranes, can't believe the infrastructure. Have a look at the appetite across India. So I think that steel is going to have a resurgence. We've got to get through the natural next part of, I think by the end of the year, we're coming that post-COVID experience and that whole time frame. And I feel as though with the Trump administration and what he's planning to do is not only drill, baby, drill, but build, baby, build, and build America. And I go to America and their infrastructure is shocking. And so I think that the demand for steel is going to be immense over the next decade. And I truly think that, its prices will be well supported. Keep an eye closely, naturally, on the likes of copper. And, from a trade perspective, look at zinc, aluminium, tin, all of the metals. They're a place to be, and I feel as though in the short to medium term, they're going to be well supported, and all the linkages associated with the companies that are, from a supply chain mechanism and all of those sort of, the linkages along supply chains.
Typically, Peter, the meeting of the US Fed usually makes headlines, but also the meeting that we saw in China talking about the package to revive the economy has really been a big key talking point. So what's your outlook on what that means, and how does one look at the India versus China trade?
Well, you guys are let's be realistic. You guys have had a raging stock market, and your stock market's performing incredibly well. And I'm just looking at screens here, and it's just showtime. What you've experienced over the last 2 years to 3 years. You cannot compare the Chinese stock market with the Indian stock market. You guys there's just no comparison. You just don't put them in the same category, because you guys have got young population, you've got growing demand. I really think that you've been up 20-25%. There's a bit of a sell-off, but that's only hot air coming out of a market. Markets evaporate, they just take that hot air out, and there'll be a price point that they'll be, and it's probably good buying. Because I still believe that the long-term horizon for India, everyone says it's going to be a golden decade. I think it's a golden century. This is your century to shine. I won't be here at the end of the century, but I'd love to be here to be able to look down and just be, to see what India will transform into. Young burgeoning entrepreneurs, you've got an entrepreneurial mindset, and I feel as though that, I'm expecting skyscrapers across the fabric and the landscape of India, and then the connection with infrastructure, roads, tunnels, you name it. And I really think that it's going to be a dynamic time, and I don't write India off at all. India's time is now.
Right, and Peter, any big headlines that you're watching out for from the world of commodities right now?
Well, I think let's cut right to the center of the cake. It was, as well as I, you live and breathe news. I live and breathe markets, and you've had two things happen this week that are really, they were the biggest news items, I think, of the year. We had the first cut of the Fed, but now it was the second one. Is there going to be another one? And that was done. And then, naturally, the election. So that was my focus. I think every trader's focus. And there was so many, that changes everything. If Miss Harris was elected president, Kamala Harris, then that would have had a different mindset to a trader, and the interpretations could have been totally different. So we had to wait for that shoe to drop. It's dropped. Now comes the next part, the implementation of those strategies by the number one under an entrepreneur. I put Mr. Modi as an entrepreneur first. I listened. I listened to his presentation in February in New Delhi, and I was over there with ET now, and it was just breathtaking to listen to the Prime Minister. Didn't have a note. He spoke for 45 minutes and didn't draw a breath. He was articulate. His message was simple and clear. And I see a similar mindset with President Trump. They're marvelous orators, and their vision is for the betterment of their own nation. And I truly think that, the world's going to be in a really great place moving forward. And I'm quite excited about that, the whole process over the years ahead.
And give us a sense as to what the outlook is when it comes to other base metals, because there have been a sharp drop in the inventory levels of copper, aluminium. I wanted to get in your view there.
Yeah, well, I look at those markets, Savannah, and I'm also, I'm not too fussed about it in the sense where they're well bid up from where they were at those 8,000. They languish at 8,000. We've had, copper back around that 10. It's about 9,600. Aluminium's been sold off, but it was nowhere near those lows that you're experienced, or zinc. So they've bounced a little bit to the upside. It's probably cheap buying. Overall demand, I think, is again going to remain very strong in the years ahead, and it's probably a price point that's cheap at the present time, considering what they may go to as far as a leg up with price and demand. So I look at it from a trading perspective, being very mindful. You see big whipsaws across that, but copper's such a wonderful barometer to give people an indication of what the world's feeling, and look at supply and look at demand pictures and all across the fabric of the globe, because they're metals that are used and consumed by industry, and that is not going to change.
And silver, that sure has been buoyant of late. Do you have any thoughts as to where it's headed?
Silver's, I think the under investment across that whole commodity has been something that's going to come into play probably in 25. I think it's been, in a lot of ways, I'm not suggesting held underwater, but it's just no one's invested. It needed significant investment over the last 10 years. There's a critical shortage as far as silver, and I'm interested to see from not only the demand picture, but the gold to silver ratio. Keep a very close eye on that. And I think in some ways, silver's probably got a better leg up than what gold has on a percentage terms. So I think it's cheap. And I think, again, its best years are going to be ahead of it. And I won't be surprised what price silver can get to, because I just think that from a demand picture and an underinvestment, it's really going to come home hard. And I think it'll be an exciting place to be.
So, Peter, it's been a pleasure interacting with you, really getting a gamut of views on all the commodities. So thank you so much for taking time out and joining in.
Thank you, Ivan.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.